to the halftime report presented by Tackle Trading, where I have Coach Frank here on Friday Fun Day, where Frank and I get a geek out on charts. And Frankie, you and I were just sitting in the pre-production show for the last half hour, and I think the only thing we did was talk about charts. And if it wasn't for literally an alarm going off saying it's time to go live, I think we just would have kept talking about charts
I think so too.
for the next hour.
It was fun, and yeah, I'm looking forward to talking charts. Like you said, we'll just talk about them live with the team. I'm very much looking forward to it.
Well, and that's what we were doing. We were going through some scans on FinViz, and we're like, well, what do you think about this chart? And what do you think about that chart? Oh, I like that retracement. Oh man, that's a good reverse. I'm like, hey, we should just like go live and keep talking about these charts. So welcome out to the halftime report, guys. It's a pleasure to have the pro members and our amazing trading community here every single day. And we got a lot to cover here today, Frankie. We're going to talk a little bit about the market, get your take on the market from an index perspective. We're fighting another breakout in the market right now with the S&P. NASDAQ going ham. Russell 2000 forming a little bit of an interesting bullish retracement, testing some previous old breakout channels. Got a lot to talk about. Want to welcome out Frank and Frank Pleasantries. How are you today, my friend?
Oh, I'm excited to be here, doing well. It's Friday. There's lots of interesting charts, so I am doing fantastic. And as always, I always look forward to coming in and talking charts on Friday. So it's my favorite day of the trading week, I think.
Well,
Maybe Monday morning. I don't know, Monday morning or Fridays. It's
mm,
50-50.
I do like them both. If I had to pick Friday, get done with the week. You're kind of coming to a conclusion. It's usually been a little bit of a long week. You're looking forward to the weekend, and you just get so excited for those opportunities that are coming up Monday. So I like Friday. I like getting ready. I like preparing for the event coming up. The event is just you put your trader's hat on, you do your job. But I like scanning. I like geeking out on charts, and so I think I'm gonna have to go with Friday, Frankie. But
It's
it's
like
close for me.
Christmas and Christmas Eve, right? Fridays are Christmas Eve. It's
Oh,
exciting,
I'm
it's
definitely a
fun, a lot of
Christmas Eve guy.
activities, and then I'm up at like 5 in the morning, so I can peek and get them opened up on Monday.
There you go, buddy. I like it. I like it. Frankie, technically here we are finding a little bit of a breakout in the S&P 500. Like we quickly talked about yesterday, we got another breakout off of a nice little flag slash bullish retracement pattern in the NASDAQ. Dow Jones very quickly. You're looking at a little bit of a choppy breakdown here in the Dow Jones. Seeing some separation here, Frankie, and we'll get into the Russell 2000 here in just a second. As we're seeing a little bit of separation from the strength of the trends, what is your read in the market indexes?
Well, a few things. I mean, one, tech, remains very strong, right? Discretionary. So those growth areas really kind of held up, particularly those big tech names, right? Apple,
Yeah.
Amazon's been moving and shaking. That's always helpful for the indexes. Microsoft. I mean, so we're seeing a lot of big, big names kind of leading the charge, which
Yeah.
hasn't always been the case this year, right? And so you are seeing a little bit of a mixed bag in some of the other areas, I believe, but you're really getting that strength over in the growth more, even like Facebook and Google. Google's been pretty well, but Facebook's been turning around a little bit.
And turn
So
around choppy, but
it's
it is.
it's kind of that kind of market, right? The market of several years ago where it seemed like the FANG stocks were always leading the charge. It feels like a throwback to that time to me as we go through this week.
Yeah, you are definitely seeing a little bit of rotation, and we've talked about this recently as the markets form reversal patterns as we saw a month and a half ago, and the entire market starts going with one another. You start to see separation over time, and right now you are seeing a little bit of separation back into growth, back into the big names out there. Back into Apple. We were talking about Apple. You're obviously seeing strength and relative strength in the NASDAQ this week, but you've been seeing that over the course of the last 4 weeks as well. When you're looking at the NASDAQ this week, Apple on our options report from the previous week, it was a Trade Masters pick on Wednesday as well.
Mm-hmm.
A lot of market participants eagerly anticipating this Apple breakout, and the breakout was legitimate. Now we're just in the middle of that type of momentum that is currently going on. But when you're looking at Apple, and the question I have for you on Apple, Frankie, is you got a real strong short-term movement here. You got
Right.
momentum that is building in the short term. But for a short-term trader, like say, let's say a fairly aggressive swing trader, it might have already ran a little bit too hot following that breakout from 2 days ago. But from a multiple time frame perspective, this is the week you are finally seeing a breakout here on Apple. How do you navigate when the short term is a little bit overextended, but the backdrop of the weekly chart, such as Apple, is so strong?
I think you really have two fundamental choices. One, momentum play it, right? Hey,
Yeah,
let's just get in. Let's, take out the top, go intraday or use the bar's bottom for our stop loss. And if this bad boy just wants to run, let's just run with it, right? So I think
yeah.
there's that side of it, which is, legitimate, I believe. And
You
then the
bar by
other
bar it. Yeah.
and the other side of it is, okay, well, listen, if this multiple time frame breakout is important, which, history would lead you to believe multiple time frames are important, right? On it,
Hmm.
there's probably going to be multiple trading opportunities in the future on Apple. If I'm not catching this one, the only real risk I'm running is if it just flies up to say 200 with no pullbacks, no consolidation, nothing else. That could happen. It's pretty unlikely though, right? And if that does
Yeah.
happen, well, I can be happy because I know lots of people who are trading Apple. Even though I might have been left out, I'm still, pulling and happy for them. So just waiting for that next development to occur, whether that's, a little 2, 3 day high base, little flag back into the nine, whatever it might be, just realizing this is a great signal, right? This signal suggests to me that we want to move up, not just up right now, but up over time. And just think about it in terms of windows, right? And I'll get that opportunity. So if I'm not comfortable with the momentum style, I'm just going to say, hey, this doesn't leave the watch list. I'm going to be on top of it very aggressively as soon as I get, something that fits into my systems and rules. Let's rock and roll on this guy. So that will always be my approach, because you see it a lot on those multiple time frame breakouts, right? You saw it on Adobe. Adobe had that big cup and handle breakout, and it just went nuts, right? It can be tough to get in that next day, right? because of such, because you've got to put a stop loss at least, a little bit further away than maybe you would feel comfortable with. But it's the signal itself, right? The trade is what I make of it, but the bullish signal, that's for all of us, regardless of whether or not you would trade momentum. I'm going to sit it out, whatever else the case might be. So that's kind of the approach that I take to that situation as a general rule.
Yeah, and for me, when you're looking at Apple here, you got to love the momentum, and it's hard to see the market showing too much concern when you're having strength at the top. Google, fighting another breakout, Facebook recovering a little bit, Microsoft. Let's go take a quick peek at Microsoft. Microsoft looking fairly tasty above that 340 handle as well. The top of the market is certainly solidifying itself and is showing leadership through the NASDAQ, no doubt about that. But on Apple, I think, I certainly agree with your analysis on Apple. You got to love the multiple time frame breakout term trader. I think the train left the station a little bit. I,
Mm-hmm.
I like waiting for if you have not participated in this. I don't feel chasing after 5 bars up and 3 bars into a breakout is typically the best time to look at it as an active trader. And so I think it's more likely you wait for that high base, you wait for that flag. You basically have the fundamental backdrop of the weekly breakout, and you're saying if that weekly breakout is legitimate, I'm going to get a lot of opportunities in that trend from a short-term perspective.
Yep.
Patience plays here if you haven't been participating, in my opinion, on Apple. Microsoft, Frankie, a little bit of a different story. Breakout earlier this week, but it hasn't really seen the momentum that Apple did. But then again, Apple's playing catch up to Microsoft a little bit. Microsoft broke out weeks and weeks and weeks ago. Apple held back a little bit. Apple playing a little bit of catch up. What about Microsoft here on the breakout as well?
I think it's probably easier to build a trade on it, or at
Me
least a
too.
more traditional swing trade, right? Maybe not a momentum trade. I think we could probably put together something that was very sensible momentum wise on Apple, but more of a traditional, my style of swing trade. I think it would definitely be easier to set something up on Microsoft. There's the same bullish arguments, big picture for Microsoft as Apple, right? I
Hmm.
mean, we're at all time highs. listen, just because one's winning the race today doesn't mean the other one's a loser, right? It just means somebody's got to win the race today. So yeah, if I were picking between the two, I would lean towards Microsoft. I'd feel a little more comfortable about my stop loss
In
options.
terms of new entries, yeah.
Yet my entry, I wouldn't feel like I was quite as overextended. Whether or not I am, that's how I feel, right? And that goes a lot into this. So yeah, I'm with you. I think it would be easier to map out a more traditional style swing trade on Microsoft. And on the other side of it, I think it's easier to map out a momentum style play on Apple. So I guess it probably comes down to your
Well,
personal preferences.
it's simple. You never want to be at first, but you also don't want to be the last when it
Right.
comes to trading, right? And on Microsoft, I kind of feel like you're not the first, but you're in the zone. On Apple, I kind of feel like you're the 230th millionth person to get involved in that breakout.
Yeah, I think
and,
that's
and
fair.
and so I certainly see more price appreciation, but I just like the zone you're in from the beginning part of the trade. I thought the trade was 2 days ago on Apple. Today, I think you're still in that zone on Microsoft, even though technically we did confirm a few days ago on Microsoft. Let's switch to a little bit of the Dow Jones here, and obviously when you're talking about the Dow Jones, you're talking about a lot of cyclical areas of the marketplace. You're talking a little bit about finance, you're talking a little bit about energy, you're talking healthcare, you're talking some very economically sensitive areas of the market, Frankie. And just a little bit of news that we did get from the overnight action. And if you want to see where the weakness in the S&P was today, it really wasn't today. It was really on the overnight action. As you see the market following a nice market yesterday, good market recovery day from an intraday fall yesterday, kind of building back into that breakout channel. Well, what occurs here is the European cash open here, Frankie. And there was news that came out that has had a tendency to hurt cyclical type price projections, and that was around COVID and lockdowns that are reemerging out of Europe. Europe basically had their first country lockdown for the winter season, with Austria announcing lockdowns. The European markets really took it on the chin following the news of Austria locking down, and that's why you're seeing a little bit of underperformance in those areas of the market that would be a little bit more economically sensitive, such as energy, crude oil taking it on the chin. But I think we got something to say about crude oil now that we're testing the old breakout channel at 75. So you did have a little bit of news on the overnight with Austria locking down due to COVID restrictions. That had an impact on the European markets. That bled over into the cyclical areas of the U.S. stock market, and one of the reasons why you're seeing big tech outperform a little bit of a pandemic type playbook playing out
Yeah.
here today. So just wanted to give that news. The Russell 2000, the last index I do want to discuss here. Nice little pullback that has formed over the course of the last week and a half, 2 weeks. Now, Frankie, this is where the action starts to take place, in my opinion. It's choppy. It's very choppy, especially on a day where you had some negative news coming out on the overnight action that's going to impact this area of the market a little bit more negatively than, say, the NASDAQ or the broader market in the S&P 500. So when you're looking at this, Frankie, this is what you call a snapback bullish retracement that is now coming into the old breakout channel here, Frankie. You see that old breakout channel right there between 2300 and that 2350 level. You're
Mm-hmm.
coming into that on that weekly chart here, Frankie. Very simple question, Frankie. You're looking at buy the dip mechanics here. You're looking at the retracement here with some anticipation, or you're a little bit uneasy with this retracement, given the fact that a lot of the money is starting to flow more into technology, discretionary plays outside of the cyclical areas of the market.
Maybe a little bit of both.
Hmm.
First, the zone is really interesting, right? And
I
so
agree,
first things
100%.
first, that's I need to be open to the idea, right? And to kind of offset maybe those concerns, well, I would argue that you don't have confirmation yet. You're basically betting blind, right? Hey, I bet this support, this breakout channel is going to hold. Not the worst bet somebody could make, but not a lot of confirmation behind that either. So
Yeah.
getting that confirmation, that upward movement, taking out that intraday downward trend, the things that I would need to see to confirm anything that looked like this, that would alleviate those fears. That would confirm the breakout. That would confirm the snapback. So I still think we're one or two candles away. And I do think we need to make up our mind pretty soon, right? Because we're hanging in that zone right now. It's close enough. It doesn't really, it stands out, right? But if this, say,
Yeah.
pulls back too far to, say, the 50-day moving average, all of a sudden, I'm wondering, is that a failed breakout? You know what? It might be. I'm not interested at all. So it does need to kind of decide in the very near future. I think we need at least one, maybe two bars before we get that confirmation. But if we do take out that intraday downward trend, that would give me that confirmation candle, and I would be very interested. Absolutely.
You mentioned the concept of confirmation here, which is so near and dear to all of us traders. And I think one of the things that veteran traders really do rely on, that new traders need to work on, is the concept of confirmation, Frankie. And I'm doing a webinar, Frank, on for Tapper Trading 101 on our YouTube channel on Monday on swing trading. And I typically like to do a little bit of a theme with my swing trading webinars I do. And the theme I'm going to be doing, Frankie, is telling the story of swing trading and teaching our wonderful community about swing trading through the quotes of Jesse Livermore, who is, in my opinion, the greatest trader of all time. And when you said the concept of confirmation, I was reading a little bit of Jesse Livermore last night, and there was two quotes that really stood out to me on the concept of confirmation. And it was just, the concept is very, very easy to understand. Sometimes it's hard to follow through with.
Mm-hmm.
Jesse Livermore said, do not anticipate a move without market confirmation. Being a little late in your trade is your insurance that you are right or wrong. He also said, only enter a trade after the action of the market confirms your opinion, and then enter promptly. Apple breakout, you don't need to wait and see more confirmation. You get the confirmation, enter promptly. I think you got to see confirmation here, Frankie. You start with the fact that you like the zone. You like the zone.
Yep.
But what you don't like is the overriding news that is creating the volatility as the Russell 2000 is coming into this zone. That's one of the reasons it's a little bit more choppy than other retracements we have seen in the marketplace. You like the slowing momentum in the candles within the zone. You like that as well. You like the wicks coming back. You like the wicks coming back up. Test, come back up. Test, come back up. That's a little bit of a change from Wednesday. You like this, but what you have yet to receive in any capacity, in any time frame during this pullback from the time it nailed 2450 all the way down this retracement, was the concept of confirmation. We got to see that as a trader before we move. You like the zone, you want to be right. Well, the market tells you you're right when we see confirmation, and confirmation can be a little bit different regarding the different time frames you're looking at. But for me, confirmation simply, you got to, at a minimum, Frankie, at a minimum, you got to go above the previous day's high to confirm that bullishness, to confirm those day traders are coming back into the market. And even though Jesse Livermore didn't say this, I've said it many, many times, you got to see those day traders make some money and be consistent before the swing traders come in and start pounding the table as well. I'm not seeing that here in the Russell 2000 yet. I'm seeing any degree of strength being met with even more weakness. Let's see a resistance channel get broke out of. And specifically, you had the chance here. You had the chance there. It tested there. It tested so good there, but it ultimately did fail that. Since that time frame, you haven't got close to testing confirmation yet. You've tested the lows and recovered on the intraday. Let's see some real strength in the Russell 2000, and maybe that does come through the weekend. Maybe we do see that upward movement in price. And again, there's a reason we like the zone, right? These things can be choppy, though. We're just starting a trend in the Russell 2000. It's very important to see this confirm where we are looking at in this zone. And again, it could confirm at 2350. I think that would be a picture perfect type retracement if we do ultimately get that confirmation. But again, this zone is 2300 to 2350. It can get choppy within that. And right now we haven't seen the volatility subside yet. So again, like the zone, we really got to wait for confirmation. Frankie, let's shift topics and let's talk a little bit about some sectors here, Frankie. And big picture type commentary very quickly, but let's rapid fire. Now, in tackle trading, guys, every Friday, Frank and I, when we get done with the halftime report, we're going to go over and we're going to start what's called the scouting report meeting. And the scouting report meeting is basically where all of us coaches that tackle trading, we all get on together and we go through our scans together. We talk about the stocks that we're looking at. We talk about the technical analysis we like, but we also rank all the sectors from a scoreboard perspective at tackle trading that's within our tackle trading newsletter. And so when we do that, me and Frank like to get a little bit of a heads up on a little bit of
We do. We like to get a head start.
we like to get a head start. We do. And then all the other coaches like, I can't, why am I even here?
You guys already did this.
Well, you should come on the halftime report then. But we do like to get our head start. We like to do it in front of the community here, Frankie. So let's talk about the growth areas of the market. Frank, let's start with the NASDAQ. We already, technology sector. We already talked about the NASDAQ. Any other commentary outside of Apple, Microsoft, and maybe a little bit of throwing a little bit of Adobe, throwing a little bit of Micron, throw a little bit of Snowflake, and a little bit of Akamai and Datadog. And seems like this market is really firming up here, Frankie. What's your read on tech?
Yeah, I mean it's strength at the top, it's strength in the smaller players, right? And so it's strength in the semiconductors. So you are absolutely right when you say that it's, really it really is a standout to me.
It is.
Because, it's one of those areas that you're like, well, whether or not I'm trading Apple, I know Apple going up is not bad for the strength of the tech sector, right?
Exactly. Apple's got big shoulders. It can carry.
It can help. It can help out. And while there's always some dogs out there, right? IBM, the Mastercards and things like that. For the most part, you are seeing pretty solid movement, at least trend wise. I think as you're looking into the sector as a whole, it's a place I think you continue to like. It was, Mark brought up the ETF as a candidate in the Trade Masters webinar. I thought it was an interesting way to go about it. It might be a little tough to take that particular trade, but I do think this is an area that you are very open to looking for trades early as Monday morning.
If Coach Mark is capitulating on a breakout against an all-time high, the thirst is there.
Yep.
Right. The thirst is there. I agree with that. I think you're looking at an upgrade here, a little 5-point upgrade. You're seeing real strength here. And again, the momentum is starting to tick up a little bit. And that's why I do think you're seeing a little bit of separation in the strength of the sectors. But I certainly agree with you. When you're looking at the other sector that's really carrying the charge here, it is discretionary. This week I felt like it was an important week for discretionary, given the fact that you've had some recent bouts in volatility as tied to, well, a lot of it tied to Tesla and whether or not and how much Tesla shares Elon Musk was selling. I've said this during the volatility last week, during the recovery this week. I've talked about liking the $1,000 price point on Tesla, but I've said discretionary goes as Tesla goes. Discretionary is continually going as Tesla goes, and you got to like the recovery double bottom off of 1,000. Forming a little bit of a right shoulder here, Frankie. Yeah. Coming back to and yes, that is. I am going to be discussing Tesla yet again in the scouting report meeting. But with that said, what about discretionary here, Frankie? It's not just Tesla that is starting to pick up the pace here with discretionary. This has been a leader in the marketplace and was actually a leader before tech started enjoying this freight train of price appreciation. It was really Tesla that started this whole growth type argument in the marketplace about 6 weeks ago. Now, what's your read on discretionary? I like the market firming itself up. Don't know if we're looking at an upgrade here. I like the fact that it held support.
Yeah, you definitely like that it held support. You're going to like some trading opportunities that this movement has created for you going into next week. It is one of those that I think is a little tougher, a little more of a debate than the technology, when you're thinking upgrade versus maintenance. I think there's an argument for both sides in XLY personally. You're seeing tremendous strength in some of those retailers, right? Nike had that great bounce off the 20 last week, Home Depot, Lowe's, Tractor Supply.
Tractor Supply looks good right now.
My Frank's charts for yesterday was
all the home builders look good right now.
Home builders. I mean, so there's a lot of sure, there's always some dogs, which is,
two of my favorite stocks. Like literally, I just wish earnings. Can we just go to 2 earnings, please?
Yes, I will
Best
sign.
Buy breaking out, Dick's multiple time frame type breakout, and so
Yeah.
a lot of bullish trades to kind of select from in the discretionary space. But to come back to the discretionary, and again, I do support an upgrade in the technology sector because and not in the discretionary sector. And the reason I feel like there's a tiny bit of separation here, Frankie, is number one, it's good that support holds. We know what support can do if it doesn't, right?
Yeah.
We know what
We've
a
seen it.
stock
Yeah.
looks like if support fails, okay? But it's also easier for support to hold than it is for resistance to get broken.
Right. That's what you were supposed to do, right?
You're supposed to hold support. That's what a bullish uptrend does. Resistance is a little bit more tough to break out of. And so resistance getting violated and seeing a little bit of the separation in technology, to me, is a little bit stronger than support holding in discretionary. I got maintenance mode in discretionary, and I got an upgrade in tech. We'll see what the other coaches have to say. Comms, Frankie, to kind of solidify the growth areas of the market. I said it last week. I said it the week before. I said it the week before that, and I'll say it this week as well. It doesn't matter what this sector does until the bottom of this sector starts to solidify itself.
Yep.
And so far, we just have yet to see it.
Yeah, it's
Disney
further away
grows.
this week than it was last week, right?
Verizon, disgustingly gross.
Yeah,
AT&T
Comcast.
tries to make Verizon look even worse than it is. This is just a filthy area of the market. And you know what? This sector would look a hell of a lot worse if it wasn't for Google.
Yeah.
And Netflix, quite frankly. Netflix kissing up against the highs there as well. But again, from an active trader's perspective, Frankie, I'm not seeing a lot of trades in this sector. I'm not seeing a lot of things that are setting up outside of the Google, which can be a little bit more difficult to trade in the options market. But from a sector perspective, I still think you're between 40 and 50 here. And until we break out at 82.5, we're going to be between 40 and 50. And so it's K-trade scenario for me. One positive note, because there's a lot of dark clouds on this sector right now.
There are, yeah.
Okay, Activision. I forgot to throw that horrible company into the.
Well, that just goes without saying these days, right?
but look at that 200-day moving average catch up to the consolidation in the sector itself. That is something that we have seen routinely in the market. Whereas long term, these moving averages do catch up over time, and you start to see value arguments play out. But once again, I think that is a data point that's interesting. I don't know how compelling it is until we start to see Verizon, Comcast, AT&T, Disney, Activision, and a lot of other just utter garbage in this sector get cleaned up a little bit. But I don't see that happening this week.
It's hard to. What's also interesting about XLC, that the ETF itself, is you might be developing the old 5,200 pinch, right? Where we've challenged that 50 on multiple occasions, but we've never closed it, right? We stuck our nose up, I think, 3 separate times in the last couple of weeks, but it's a lot easier to stick your nose than to close, right? And so maybe that can be a catalyst, but I'm with you.
Well,
some of those dogs have to start contributing. Maybe not all, but some of them absolutely.
At a minimum, they got to start showing reversals. They had a chance this like a couple weeks ago, but they all got snuffed out and drove back down. But I certainly see it, Frankie. You see that 50-day moving average play a role there. You see the 200-day moving average creep up there. You got that zone between 79 and 81 that's creating that pinch. I definitely see it, and maybe in a week or two I might be a little bit more compelled against the 50-day.
Yes, I would agree.
Right now, I'm still looking north of 82 here for any type of upgrade.
I would agree.
And honestly, I got a little bit of energy filled to it to a certain extent. Back here, when we were testing that 200, same type of concept, horizontal support, horizontal resistance. That 200 days creeping up. Look at the pinch there, Frankie.
Yeah, it
and then ultimately, it turned. But
it's still got some work to do, and it can't turn without some contribution from some of those. And boy, I mean, you hit it right on the head. Some of those charts are not just yuck. I mean, they're real yuck. Right? Some of them are real unimpressive.
Somebody give me a bullish read on Activision.
No, thank
Anybody?
you. I don't think
Anybody?
anyone will try.
Somebody give me a bullish read on Verizon. Anybody? Bueller?
You're gonna have to
Bueller?
ask somebody else. I don't got it for
Anybody?
you.
Anybody? AT&T? Anybody?
It makes me like
Okay.
Verizon. It's not.
Disney?
It's not Verizon.
Anybody? Anybody? Bueller? Anybody? Yeah,
Yeah,
it's just until this area, until the bottom of this sector, it forms up and starts showing reversals. I just think you're stuck in mud here to a
yeah.
certain
I would
degree.
100% agree with that.
Let's move into the cyclical areas of the market. Let's talk a little bit about energy here. And we can't tell the story of energy without also talking about crude oil. Crude oil broke down out of the 80 barrier a few days ago. Obviously, we've been talking about not caring at all about the 80 to 85 level. The only
Yep.
thing we liked there was to break out of 85. But once again, analysis does change. And what I mean by that is you're now looking at a little bit of a different picture. 75 here is an interesting number for crude oil. It's right there where the rising 20 weekly is. You also have the old resistance channel right there at 75. 75 is also a significant whole number as well. 75 is not one of those areas where it's like, hey, listen, I market order 75.
Right.
But it is one of those scenarios where you would like to see support start to build from an
Absolutely.
intraday perspective. Now, the news of the day in specifically crude oil, once again, Frankie, when you see lockdowns happen around the world, that's never going to be good for the demand argument for oil, which
Yep.
is extremely economically sensitive. But you also have the commentary that is happening between China and specifically the United States on a coordinated effort to basically tap into the strategic reserves that both countries are have a boatload of as well. That's putting some negative pressure on oil. I'm not sure China and the U.S. tapping into strategic reserves actually would cure the inflationary situation, given the fact that that would be a short-term fix to an ever increasingly growing long-term problem. And so it's kind of, for me, Frankie, that's like, so your
Yeah.
arm's off and you want to put a band-aid on it. Okay, it reminded me of the Black Knight, Frankie, a little bit. Your
All
arm's
right.
off.
Yeah. Yep. Yep.
Right? A little bit of that scenario. Frankie, are you looking at this 75 handle and saying, hey, listen, let's see support form, or are you a little bit more hesitant here?
I think we have to start the conversation with, let's see this zone start to build up. It is a very intriguing price zone, very much, not the same as the rut, but very similar in regards to it appears to be an important place. Makes sense. Buyers should be sniffing around there with the technical
I would
catalyst.
market order the rut over crude.
Yes, I would agree with that. I think when we're looking and thinking about crude, I think what we need is that, relatively speaking, slow build, right? Where we get that double bottom, we get that first break of resistance, we kind of navigate the 50 that's now sitting on top of us on the daily chart with that 9 kind of falling back around. If we kind of got that week long dance in this range and started to see those that 9 curl back up, I could be very interested, but that's a lot of ifs at this point in time. I can't really see a scenario where if it V-shapes, that wouldn't be all that surprising, but I would not be participating.
I'm not a participant in a V-shape here.
Not at all. I think.
Can I say something to that, Frankie, on the V-shape
absolutely.
Here? When you're thinking about V-shape here, you're thinking you got to be looking at this as a bullish retracement. And for me, I don't think you can approach crude oil or the energy sector as a bullish retracement. You have a reversal. You have a double top, double bottom with confirmation between 80 and 85, and it failed at 80, which means you cannot look at this, in my opinion, as a technician, looking at retracement analysis or pullback analysis, which is all support build, confirmation, V-shape back up, right?
Yep.
That I don't think you can do that, not because of the prolonged nature of the reversal pattern from a daily price action perspective.
Correct.
I think you nailed it. I think you got to be looking at double bottom analysis. I think you got to be looking at a support build here over time at 75. And if you miss the ultimate pullback at 75, remember what I said about Jesse Livermore and confirmation. Confirmation's key here. I don't think you have confirmation until you actually reclaim $80, in my opinion. And so let that work itself out between 75 and 80. If 75 is support, that's fantastic. but you're not going to be playing in between 75 and 80. That's all that zone that needs to solidify itself, and then you play the breakout intraday. I just think you're given a week where you're like, okay, yeah, I like the zone, but let's see this really build, and let's get through some of these negative headlines that are certainly attracting some negativity in the crude market. And with that said, coming back to the energy sector, energy taking it on its chin the same way crude oil is here today. In terms of the downgrade, you're obviously looking at a downgrade here, but I'm not looking at a downgrade into neutrality at this point yet. I think we got to see how this 50-day moving average really kind of works itself out.
This is a tough one for me because on the one hand, I agree with that. On the other hand, as it is right now, it's looking like it's going to close the 50 and the 200 weekly, which short term at least would be troublesome to my eyes at least. So I think this is really going to depend a lot on the close. Where my ultimate ranking, I don't know, I would still lean ever so slightly bigger picture to the bullish side, but as far as new trades for next week, I could see crude developing to my liking much easier than XLE to my liking.
Yeah,
I don't think either
trader,
one of them,
yeah.
I don't think either one will personally, but if I had to guess, that's the way it would play out. I think we have to respect the fact that we also like crude. We did double top. We've now failed at resistance. Characteristics have changed. So I think it really comes down to kind of coming back to what you said. It's a downgrade, and I think where we kind of where or how far you downgrade it will ultimately probably come down to you and kind of your longer term. Mark's probably loving it, right? Because he's going to get an opportunity to maybe sell some puts at some strike prices he didn't think he was going to get a couple of weeks ago. Me as a more momentum based guy, I'm like, it's just going to have a lot of work to do over the next couple of weeks. I'm not going to be spending Thanksgiving with the energy sector. I'm almost positive that that will not be part of my Thanksgiving plans.
I certainly agree with that. Energy here, looking at a little bit of a downgrade in front of us. What about the industrial sector here, Frankie? Recent breakout, but we haven't seen the momentum above the breakout channel. Still playing defense. What's your read?
Overall, I still like the defensive nature. I still think the same thing I thought last week. We need to take out these tops to get that confirmation. Again, it's one of those weeks where it didn't do anything wrong. It just didn't do anything right, right? We continue to hold the breakout channel. And so that's a good thing. Would like to see it done something with itself, but you don't always get what you would like. Now, if we, close below that 20 and kind of fail that breakout, I think the conversation changes a little bit. But as it is, I still think you're saying, hey, we're holding the breakout. It hasn't wanted to run for whatever that reason might be. We confirmed through the top of this little short-term consolidation. That's where we're getting our signal. And it's, this is an area where you're seeing a lot of weakness in defense, this type of stocks, right? Yeah. To no one's surprise, Boeing, you brought up General Dynamics, when we were talking a little earlier. So you're seeing some weakness in and that kind of fairly broad, I believe, when we're talking about the defense side of industrials. But then, you're still seeing really nice consolidations on Union Pacific, right? FedEx has been moving.
FedEx looks a little interesting as well.
So it's a little, Carrier, Otis, right? Some of those aren't huge names within the space, but they are parts of the industrial sector. So it is a little bit of a mixed bag. And so it's kind of a weird variation of what we talked about on XLC. We kind of want to see those underperforming areas stabilize. That would really help the sector as a whole, right? And maybe get the strength to kick back up. So it's not a broad, everything looks good, or at least, most things look good within the space. It's very mixed, I think.
I think you get a really good read when you scan sectors, like the individual components of a sector. And when you're looking at the industrial components, there's just not a lot that stands out, in my opinion. For example, you mentioned FedEx, for example, FDX here, right? A leader in the space. It's interesting, right? It is certainly interesting, and I do like the bullish retracement following a pretty nasty earnings miss, and then obviously the recovery and the gap fill. I think it's interesting, but I wouldn't exactly call it a leader in the space right now, with the market kissing against an all-time high breakout and FedEx in recovery analysis, right? So it's interesting, and I certainly see some trades there. you mentioned, Car and Otis here, smaller components of the sector, but a nice little right shoulder breakout in Otis. And Car, we talked about last week on that same right shoulder breakout, and now it's back up against the all-time highs there as well. So yeah, I see there's being a little bit of strength, and you do got a couple momentum, interesting momentum charts like Fastenal or Stanley Decker, but for the most part, I see chop, right? For the most part, I
Yeah.
see a little bit of good, a little bit of bad, a little bit of volatility, a little bit of it's just nothing truly stands out in this sector. And so you're looking at, I think you are looking at stabilization here. I don't think it's done enough to downgrade, quite frankly, because like you started, it hasn't done anything wrong. It's just,
It
well,
just, yeah.
let's get some up.
The folks,
Let's break out again. Let's
yeah, the
go.
folks that aren't contributing, the airlines, the defense, airlines will be interesting because most of them are testing support now, right? They've sold off pretty heavy. They've been moving and shaking lately. Big support bounce, big sell off at
Jets.
resistance.
People love it at 22.
Yeah,
It's gonna be
Jets,
interesting.
all American, Delta, United. I mean, they're all at these support zones, which
Hmm.
likely can have an impact. At least the support in airlines hold. That's going to at least help the argument in XLI. If it gives out, that might be the straw that breaks the camel's back and pushes us through that breakdown. I think it really is kind of a more of an industry based place than a sector based place,
Hmm.
where you're seeing real weakness when you're looking into the airlines, although those are strong support levels. That's why I think it's an important, and I definitely think it's worth keeping an eye on going into next week. And some of the defensive companies, because your friends Johnson Controls and some of those
Yeah,
type of
baby.
companies, Rockwell, ADP, Otis. I mean, there are some great things. The railroad's still looking
Hmm.
solid, so it really is very, very separated. It'll be interesting now that we're at support on some of those weaker areas, how that impacts
Well,
this as we go into next week.
and that's the thing. Like, for example, Rockwell Nation. You got. I, it was my favorite pick of the week last week
It's a good one.
in rapid fire. Love the bullish retracement analysis here. We talked about it last week. The breakout here is tradable, but it's certainly not as good as that bullish retracement was. When you're looking at Car, you got to like the right shoulder breakout of 55, but you're not looking at anything at this point, right?
Mm-hmm.
I mean, it's kind of already ran its course. When you're taking a look at a lot of those potential industrial plays, I kind of feel like they were last week's trades.
In the strength,
And
I think that's
yeah,
fair. Yeah, I think that's fair. The performers were last week's trades, and now we're continuing them. Right, if you're in them,
yeah,
you're
I think your
managing, right? But
continuation.
yeah,
Yeah.
I think that's fair. It's an interesting place for sure. It certainly doesn't, in my eyes, deserve an upgrade, but it is really interesting. I'm really interested in seeing how these bottom areas do at these support zones, because I believe those support zones are very important.
I agree. I agree. And for the sector to hold its breakout channel, things like Jets, they need to hold at 22 as well.
Yep.
Right. That again, we talked about it in comms. Comms can't pick up until the bottom solidifies. Same type of conversation I think you're having here. Basic materials was a little bit of a standout to me, whereas in industrials, Frankie, I didn't really find a lot of standouts. I do have a few stocks I want to talk to the team about, but here in basic materials, I did see the technical patterns were solidifying themselves a little bit. The charts have been cleaned up a little bit, and materials has been a fairly consistent sector over the course of the last, I would say, the last month and a half. It's been a fairly consistent sector. I even got this pullback as fairly
Yeah,
consistent,
pretty consistent.
establishing a higher high level at $90, coming back down into that 88 level here, fighting for a little bit of a momentum shift here today. Look at that 30-minute chart here. You see that consistent pullback, right? You see that flag-based pattern, that bullish retracement. Look at the recovery here, fighting for some degree of confirmation as well. So let's take a look at the sector. In pullback analysis, it's one of those scenarios where you're never looking to upgrade the pullback,
Yep.
but you kind of just
Kind of like it
like it
more.
more,
Yeah, exactly.
right? Speak to that, Frankie.
Yeah, I mean, at the end of the day, the price is down, right? The Bears have won this week on XLB. That's just a fact, right?
Yeah.
That's just not an opinion. That's not up for debate.
Bears meaning profit
This
takers
yeah,
on the
the
bull.
sellers,
Yeah,
sellers,
it's
right? So
sellers. Yeah,
just sellers, right? Doesn't necessarily mean
yeah.
they were bearish, but
I just want to
sellers,
clarify. Yeah.
yes, that is it. Yeah, absolutely. So sellers won, right? You got to respect the fact
So,
that they
yep,
did
agree.
win, But what's happening is the short-term analysis, because that's what all we can see that their win was, right? It was no long-term analysis. It was just profit taking and all that comes along with that. Now we're starting to get into real support levels, right? Real, we're testing that breakout channel, hanging around that zone. We're looking to kind of see that intraday turn around and align back with that longer term, right? And that's where we start to
Yeah.
get our confirmation. And so you can easily see how that happens. Okay, well, last week, if we like the breakout again, much like XLI in its own weird way, the breakout's still holding, right?
Hmm.
Of course, with this chart development, we're getting a lot cleaner setups, right? Especially in, we'll look at a few, I'm sure later, but we're getting cleaner setups. So it really just kind of comes down to the technicals maybe are more your liking this week, but the actual movement is down, right? And
Yeah.
you always have to respect price, because price is more important than me, right? It's
Well,
bigger than me, whether I
I,
want to admit it or not.
yeah, and a couple things here, Frank. You take a look at, I think you're going to bring up Lynn and Frank's chart, so I'll just bring up Sherwin-Williams here.
Yeah,
You see that again, breakout, snap back. Tell me you don't like Sherwin-Williams here,
you absolutely
right?
do.
And so I think the picture is getting a little bit clearer with the retracement. And when you come to the materials, then for me, and maybe this is just important to me, but I don't have this as a high base. I have this as continuation within the greater price movement.
I would
And
agree
for
with that.
me, that's important because if that was a high base, you would have this as a failed breakout, and you got this as concern to a certain extent.
Yes, at least a
Yeah,
slight
to
concern.
me, I
Yes,
just see that as a bullish retracement that
I
is
would agree
now
with that. Yeah.
coming into a bull zone, right? And I think it's a little easier to trade with that being accurate in your technical definitions, in my opinion. I certainly agree with you on the material space here, Frankie. We've talked about industrials, we've talked about energy, we've talked about basic materials. What about some of the more defensive areas of the market, Frankie? We got healthcare, kind of doing the same song and dance routine it's been doing for the last couple weeks. Utilities stuck in mud over the last couple weeks as well. Consumer staples fought a breakout, failed, now coming into retracement analysis as well. What's your take on the just in general the defensive areas of the market?
I think it's very similar to really what it's been the last couple, 2, 3 weeks. We are very neutral in most of these spaces, over the last 3 weeks. Utilities, depending on the day, it's up some, down some, but it's basically the same price today as it was, at the end of October.
Yeah,
Healthcare, very similar. Healthcare is really interesting because, well, we still, if you'd played the pullback back on November 9th, you're still in it, right?
yeah,
So
hasn't done anything.
because it hasn't broken, the
Hasn't
trend
done anything.
analysis hasn't changed. You're like, well, you just get moving, but it hasn't done anything wrong. So we're really kind of stuck within that range. REITs, I think, make the most sense because they are
Yeah,
consolidating up at the very, very top, and that is the all-time high. So they're holding their own,
they're
but not
all
showing.
consolidating though.
They're
They're
all
all doing the same
consolidating,
thing.
on some level. Even XLP, it selling at resistance isn't that surprising, right? I mean, it's not even
Price really
unhealthy.
hasn't changed in the same time
I mean,
frame though.
and the pattern hasn't, right? If this support holds and we run up, heck, we like it. We're calling it a cup and handle, next Tuesday, right?
Yeah.
If we see some upward movement on Monday into Tuesday, so you're still looking, I think, at a lot of consolidation, potential breakout analysis within these
I think
places.
that's what it's at, Frankie. I think you're looking at breakouts. Even in the recovery on staples, I still think you're waiting for a breakout. You're waiting for a breakout in real
Yeah,
estate, utilities, staples, healthcare. You're waiting for something. Like
you're
anything.
way,
Wake
yeah,
up,
you
get
break
going,
some
start break something.
break something,
Um,
even support. So we
break anything.
break support, so we know to, okay, let's
So we can start
back
talking
off.
about, okay,
Yeah,
where are
let's
the
leave.
lows? Where do
Let's
we
go
like it
away.
at the
Yeah,
lows,
exactly.
right?
Okay, this failed. Well, where can we look at next? But as of this week, I mean, it really is, as boring as it sounds, basically the exact same as last week, right? Technically, at least in my mind.
I agree. Let's talk a little bit about gold here, Frankie, as we move from sectors. Frank, gold's in a little bit of a choppy, but gold's been choppy recently. A little high base type analysis when you're looking at some of the other precious metals slash SI, not LSI, slash SI. It's a little flag based pattern kissing off against the 200-day moving average. Frankie, simple question. Would you rather? Okay, let's play a little bit of the would you
All
rather
right,
game
all
as we
right.
break down silver versus gold here. Would you rather buy the breakout above 1873, drive it to 1900?
Okay.
Okay. Stop loss would be under 1850.
Okay.
Or would you rather buy the breakout at 25? Let me get you an actual number here. I'm going to have to go to intraday. Right there. 25.47. Actually, let's just go 24 and a half. Let's
Okay.
go 24 and a half there.
All right. I
So
respect it.
24 and a
Okay,
half
25 and a
on
half.
silver with the expectation of 26.70.
It's easy for me. It's very easily silver.
Me too.
Because I can easily see a scenario where silver exceeds my expectations, right? You know, what Tim and I
Yes.
were talking last week. I mean, if you really think about silver, really they're in the middle of a long-term sideways range, right? And so there's really not any, there's stuff, right? And there's things to respect for sure. But when you're talking about real overhead resistance, it's at 28, right? Or approximately thereabouts. So
Oh
it,
yeah, secondary. You're thinking
so
28.
so
Yeah.
I'm thinking that if somebody is going to be able to really exceed that, absolutely. And then, you know, the silver theme, right, versus the gold theme, right, I think is still a good tiebreaker, right? And then you just talk about the nature of gold. You know, gold can be a pain in the neck to swing trade. At least some of us believe, and I am definitely
Yeah.
one of those.
What type of analysis would you like us to break down today on gold? Because it has about 14 of them.
Exactly. And that's just gold, right? At least
Yeah.
that's, you know, and I'm with you. That's at least my approach to gold. Maybe someone who trades, you know, faster than me has a different opinion. But for my style, gold is not generally a great place to try to swing trade. You know, maybe some
There's too
stocks.
much amazing cash flow systems in
There's
like
a lot,
GDX and
and
the
there's so many
miners
little
and
randomy
yeah.
news things that can impact it, right? You know, if I were going to do it, I mean, the breaking of the top is a clean place to do so. I wouldn't dispute that at all. The breakout up above 1880 or you know
Mhm.
thereabouts is a legitimate breakout, but I think there is more upside in silver personally in the shorter term in particular. And I also, I'll be honest, I really am a big fan of anything that runs up to the 200, pulls back in a general manner because I expect that 200 to win on the first test. That is always
Mhm.
my expectations. I want to see that happen. We pull back nicely. We create a higher low. We take that second run of it. Well, the second run, that's the breakout that I'm interested in, right? And so I have an entire, you know, trading, you know, set of rules that would say you do in fact buy silver if we get the break of that 200 slash that recent swing high, as long as the risk to reward is there, which in my opinion it
It
is
is.
at this point in time. So just purely technically and within my own rules and systems, the failure followed by the higher low followed by the break without a reset is an actual act. You know, it's actionable in my opinion. I could easily see
I
myself doing it.
I agree, Frankie. I would choose silver as well over gold. I think gold's still a very difficult instrument to analyze as it still goes through its battle against the dollar and trying to figure out which one's going to continue to go up. Is it gold? Is it the dollar? I highly doubt it's both of them.
Yep.
What about Bitcoin here, Frankie? Bitcoin bullish retracement did confirm, did kiss up against the previous levels of resistance. It fought a breakout channel. You got to call it a breakout with confirmation, which means this is now a fake out scenario, which is never good technically in the short term. Frankie, what's your read on Bitcoin as it navigates the 50-day moving average?
This is an absolute stay away technically
Me
for
too.
me.
Me
You've
too.
got, you know, you've got the backdrop of the 50-day moving average, and I'm definitely going to respect that side of things. However, like you said, we faked out. We broke our pivot at this point in time. You kind of need that reset. Okay, well, if the 50 holds, great, and great for the long-term holders. I hope that it does, right? But that's not where I'm coming in. Let's run up. Let's work into those falling moving averages. Let's see that pullback. Let's see it establish a higher low. Let's kind of get working. As it is right now, I don't even know how I'd want to play this chart. I just put it into, well, I can be interested in the breakout, right? Which is a
It's a
long
day
ways
trade.
away, right?
It's a
It
day
would be,
trade,
yeah. And I'm not
and
interested in that personally. It's not my
no,
style.
You do have a pretty
whatsoever.
decent day trade setting up though, with
Yeah,
nice little breakout channel right there at about 58 and a half,
yeah,
58
I yeah, I
change,
could see
drive it back up to
drive it back up
60
into
type thing.
61. Yeah, I
Yeah.
could see
So,
that intraday.
but again, what did we just have to do? We had to go down to a 15, 30-minute time frame to actually get a legitimate trade on it, which means there's no swing trade here, right?
Exactly.
So you're
Patience is
back in that day trading mentality with Bitcoin, and until we see a little bit more consistency from a price action perspective that lasts longer than say 10 hours, maybe we can get back into a little bit more of this swing trading mentality.
it'll happen eventually,
Frankie,
right?
got through some indexes. We've talked about commodities today. We've talked about some sectors today as well. We also kind of get in a little bit of those charts we love talking about as well. I got 3 earnings roundups very quickly here,
I'm looking
Frankie.
really forward to one of them. I know that.
Let's start with Matt, Applied Materials, AMAT. Applied Materials comes in with a $1.94. Tackle 25 darling, by the way, and will continue to be a Tackle 25 darling. Just a 100% great company. Applied Materials recent breakouts, seeing a little bit of chop here. Revenue missed a little bit, and they did have a slight lowering of guidance here, Frankie. And the lowering of guidance, we're talking just a little bit, right?
Okay.
So mixed report, beat on EPS, miss on revenue, lowering of guidance slightly. That's where the gap down is. Why does it get gobbled up? Number one, semiconductors are strong, tech is strong, and there was a little bit of a mixed bag. But I do think the market does have it right in a little bit of the gap down. This is not a report you fly on. This is a report that goes down and you look for stabilization on the chart. Nothing to see here. I would like to see how 150 holds and watch that 20-day moving average certainly catch up to it. Frankie, anything else to add on Applied Materials?
Yeah, the only other thing I would add is if we do, and I would expect there's at least a reasonable chance that this happens, if we kind of stabilize somewhere up here above this breakout channel, somewhere between the 9 and the 20, right? If we stabilize there, that might be a more difficult retracement to play. It might be clean too, but I could easily see it being choppy and hard to see it being.
It's not the semiconductor I think you're looking at from an active trader's perspective.
Exactly. I would say, however, that the break of 160 would be still an actionable move. As you know, we've talked before.
Absolutely.
That big breakout long term. I still believe that if this breakout channel holds, we are getting into 180. And so the 160 break is still on my mind. I mean, what I'm kind of hoping for is we just hang out, do that post earnings dance back and forth a little bit, don't really drop, don't really go up. And 2 weeks from now, we're breaking 160 with a target of 180.
I could see a lot of scenarios play out over the next week to 2 weeks where Applied Materials becomes a really, really, really good opportunity above 159, 160.
Yeah. But you're right. Right now, you're looking at other swing. If you're looking to trade Monday morning, there are other semis that I think will be easier to trade.
There's a lot of semis out there right now. There's no doubt about that. And one of them, just because I want to, tap the 25 stock Marble, right? Marble looks like a little bit of a breakout here, hugging that 9 EMA as well. Second one, Intuit, gap out, a little bit of a sell down, Frankie. I don't know if this is going to fill the gap. Want to get your technical read here, but we got a hat trick here, Frankie. They beat and increased guidance. EPS came in with utter destruction, 153 against the 99 expectation. Really good beat on EPS numbers. Revenue came in hot at 2 billion versus the 1.8 expectation there as well. That resulted in a very impressive 51.7% revenue increase year over year. They weren't done. They slightly increased both revenue and EPS guidance for both the quarter and 2022 as a whole. They had a rockstar earnings report. Gap out is certainly to be understandable given the fact that they beat and increased guidance. Little bit of a profit taking following that gap does typically lead me to a little bit of gap fill analysis, Frankie. I never like to see that from an active trader's perspective. Let me rephrase. I really like to see it if it continues to come down and fills the gap and gives us a nice little bullish retracement. Okay, I really like to see that. But you have a mixed read right now is what I mean by that.
Right.
You got the positive movement to the top side, but you got the profit taking immediately following the news. I think you got to give this a little bit of time. Gap fill here to 650. That will look really, really
That would
good
look
if it's done
fantastic.
constructively, though.
Yeah,
So keep it on the
absolutely.
radar. Anything
Very
else
nice.
to add to that?
Yeah, the only thing I would add, that would look great, and I would be 100% on board with that. We could also, let's see if we can develop some stabilization within the range of this candle as we go into next week, right? Where we
Inside
kind of
candle
start to
analysis.
get some
Yeah.
insights and then ultimately a breakout.
Inside,
This is a
inside, inside,
this
breakout.
type of candle makes it really tough to trade for at least a few days and usually longer
Mhm.
than that when you have this type of response to earnings. But definitely watch list worthy. That's a great, great report. How do you not want to get them on the watch list?
Very good report. And then last one, Pan W here. We're looking at Palo Alto Networks. They came in at 164 versus the 157 expectation. Revenue came in line at 1.2 billion. They also reaffirmed guidance. So beat on EPS came in line with the rest of the market with their revenue as well as their expectation on guidance. Gap out, very similar to what we're seeing with Intuit. Not the force because they didn't beat with the same degree of force that Intuit
Right.
did,
Yeah.
but you're seeing a little bit of that same profit taking. I think we need some time to clear up the volatility here on Pan W. And
Agreed.
with that said, Frank, we're not going to bury the lead any longer. Another edition of the very popular tackle short called Frank's Charts, or as my good friend Coach Christian likes to say, fresh and clean.
Fresh and clean. He's always going
Frankie,
to
what do
hold
you
over
got for
my
us
art.
today?
He's always going to hold that art, that fantastic artwork over my head, isn't he?
It's never going to change.
It's never going to end. I'm going to have to
And
live in constant fear that gets shared.
I'm never ever going to allow it to change. I love saying fresh and clean. I just do.
I
Reminds me
do.
of something about Mary.
There you go. There you
Yeah,
go. Well, let's dive in. So I liked our game last week where I tossed one to you, you toss one to me. You
I
open
like
for
that
that one?
too. I am open. Now, Frankie, I haven't done all my scanning, but I have done about half of it. So
Okay.
I'm ready. I'm
All right,
ready.
you're ready to rock and roll. Okay, so I'll toss one first, and I'm going to start with Overstock, OSTK.
OSTK. Okay. A
Uh,
little bit of multiple time breakout.
Little bit of a lot of good things going on here, I think, on Overstock. Number one, we recently broke out of that triangle right back in late October, fired up pretty powerfully up into the next level of resistance, which is kind of where we're stalling, in real time at this point. We've had an opportunity to spend a couple of weeks to kind of gobble up that price action as we test that. Now, not everybody loves triangle breakouts, right? They, a lot of times, like you, Maddie, for the most part, you generally like the trade after, right? The triangle breakout.
Depends on the triangle.
It depends, right? But I would
Yeah.
say broadly speaking,
But
at least
in
that's how
general,
I
yes.
view it when I
Yes.
think about how you like to play those. Well, now you're getting that secondary trading
Yep.
opportunity, right? Where, okay, if we break through this resistance level, we have a very clear path back up into 127, 128, that high. There's just nothing there technically to hold us down. We've had an opportunity to see some profit takers come in, do some consolidation, build up some intraday. So nothing fancy here. Breakout of this resistance level, working back into those old highs in that 126, 127 general ballpark. Can I sign you up?
Yeah, I do like the breakout here. You got a couple weeks of consolidation fighting up against a pretty important major breakout channel, and obviously 128, 127 does stand out on that weekly chart here, Frankie. It's choppy, but again, it should be choppy. You got some wickety-wick nonsense around 112, the base around 110. So that's kind of your zone of resistance, Frankie, there. But you got to like it on multiple time frames. You got a daily that's lining up with the same breakout channel that's lining up on the weekly chart. And Frankie, we've seen this all over. Right shoulder breakouts typically have a tendency to go test those highs over there. I do like that on Overstock. And Frankie, you're talking about a discretionary stock in a
Yeah.
market that's favoring discretionary stocks.
Yep.
I think you got to like that. So yes, I will match your discretionary play, by the way.
Okay. All right.
And I will give you, oh, do you want, I don't have it in me not to, Frankie. I just don't. I'll give you Tractor Supply.
Ooh.
I just love this little engine. It just is a little engine that never stops humming. I love the current momentum. A little bit of a high base with a retrigger above 230 here, Frankie. I
Mm-hmm.
got Tractor Supply. I would like a little bit. If you give me the three wishes in a bottle type thing on Tractor Supply. I would have loved another 2 days of consolidation with the 9 EMA catching up and then just make that picture perfect above 230.
Sure.
You don't get what you ask for sometimes. I like the strength in Tractor Supply. I like it above 230 here, Frankie.
I think you can absolutely build something around this. Play the little breakout, get the stop loss below some intraday stuff, and that 9 EMA. Basically, you guys want to keep riding the 9. Who am I to say that party's over, right? These guys have been fantastic as of late. They're definitely keeping up, if not outproducing the sector as a whole. Nothing sitting on top of us. They've shown historically, I mean, they can run, right? It's not like these guys are Procter and Gamble that, when we trade Procter and Gamble, we put kind of on that, well, this is kind of a position-y type of a trade, right? We do poor boys, or we just buckle in for the long haul. Tractor Supply doesn't really fit into that with their history. So yeah, I like this because it gives us a nice, easy, clean way to play into the momentum of the sector. It gives us options. I mean, while I wouldn't choose it, I think you could at least explore the idea of stop loss below today's low and just basically
I think the 9 stands out here.
I would want the 9 as well.
Yeah, and by the way, if you go and look at this company, you'll see it likes the 9 a lot of times.
It does really like the 9, and that's where
that's
where I'd want to be. But if I were, and that's who I am, right, as a trader. But but if I wanted to be a little tighter, at least it gave me that option, right? If someone said, hey, I'm putting my stop loss below today's low, it's more of I wouldn't and not you can't do that, right? Type of analysis, at least in my opinion. So yeah, absolutely.
I like it. Okay, you're up.
All right, I want to go back to the discretionary well. One time, this was my Frank's charts from yesterday, and that is Yum Brands, YUM.
Well done on Frank's charts on Twitter. And if you haven't had a chance, I know Frank posted that. I believe Christian actually posted it.
Yeah, Christian does
in our Discord channel, and he put it out there on Twitter as well. But Frank, love your Frank's charts. 2 minutes, rapid fire style on one of your favorite charts out there, Frankie. And I'm not going to say no to a right shoulder breakout. Not going to happen.
I didn't think you would. And by the way, I have to cut a second Frank's chart video almost every time because I'm almost never done in 2 minutes. The first time, this was 3. Usually, so I'm like
Christian
2.5.
Christian comes to me yesterday. He's like, "Hey, Matt, you know how you're doing your webinar Monday?" I'm like, "Yeah, I'm excited." He's like, "Do you think you can cut me a 2-minute Matt's whiteboard for social media? Like, I could promote your webinar?" And I'm like, "Christian, I don't think I can cut anything in 2 minutes."
It's hard.
Why do you think Frank does Frank's charts for Twitter and I do it for, Discord?
Right. Yeah, exactly. It's tough.
I don't think I could say good morning in less than 2 minutes.
Yeah. It's easy to go over. And I absolutely did yesterday by 50%. I went 3 minutes. It's like, all right, I got to cut that again.
Listen, you got 220 on Twitter and you got a book in there, so you got 2 minutes to get that done, bro.
Exactly. I don't have the luxury of saying, so but it's a fun challenge to get it in 2 minutes. And of course, who doesn't love talking about charts? What I like about Yum is really a lot of things. As you pointed out, very clean right shoulder break above 128 in and of itself. That stands out tremendously to me. Number 2, the weekly chart. This was just a bullish retracement on the weekly chart. These guys have been moving. They have been shaken on these bullish retracements on a longer term analysis. Will they do it this time? I don't know, but that's who they've been as of late. So they're really capable of picking up great momentum going forward. Nothing at all technically to scare you off until 135, right? I mean, we take out this 128. We've taken everything out other than the tiniest of intraday stuff that's not going to concern me in any way, shape, or form. Going to have great risk to reward one way or the other. I like the idea of kind of stop loss below the weekly candlestick personally, but we could put it up a little bit higher, even potentially a little bit lower.
If you're underneath the weekly pivot, you're definitely more position analysis than you are swing trading analysis, right, in my opinion. But so, we can wax poetically about stop loss placement at another time.
Exactly. What I like is
our
options.
Focus is. Yeah.
And stop loss options, right? Because my style of stop lossing is my style. It's probably not going to change, but that doesn't mean Jonathan's isn't something different. Yours isn't something different. So I always like when a chart presents us with options for stop loss, because I realize that not everybody's me, but you're right. I mean, it's the entry, it's the window that we have to work with. And most importantly, because of the options stop losses present us, we can probably make the risk to reward work to, within our personal style. So nothing fancy here. Right shoulder break, looking great on the weekly chart. No reason, in my opinion, that we're not knocking on the door of 135 if we can take out that last line in the sand at that 128.
Yeah, and I think the market's telling you exactly where they're ready to buy based on exactly where they've been selling. And
Yep.
right there, that is very clean. You see that right there at about that 128 level. If you come down to a little bit of a lower time frame, you see 128 there, you see 128, 128. Literally on the cash open, 128 dinged right back down. That was a gap out from 125 all the way to 128 and came right back down. 128 stands out to me on multiple time frames, weekly confirmation, intraday confirmation, daily confirmation. That makes some sense to me. So I like the pick there, Frankie. Let's go with, we got three indiscreet. Let me go to the tech space here, Frankie, and there's a dime a dozen. You got the Apple momentum, you got the Microsoft clean breakout, you got Adobe here looking pretty interesting above a multiple time breakout as well, but it's ran. I'm going to bring you a little bit of Seagate technology here. We are looking at a little bit of a different picture here in the tech space. A lot of these tech plays, Adobe breaking out, Apple breaking out, Marvel breaking out, Microsoft breaking out. I can go on and on and on, right? All breaking out. A little bit of a different perspective here. Seagate increasing momentum within the trend. This is the first retracement. And the reason I like it, Frankie, and the reason I'm bringing it here is the support build that is happening. You see it. I said it on Tesla at 1,000. I'm going to say it on Seagate at 100. I like significant whole numbers. It's not shocking to me. And look at the consistency of that downward moving intraday. I like that as well. So you look at that coming in. That's support starting to build. You look at Marty the elephant. Oh, by the way, I'm bringing back Marty for Monday as well.
I like
you look
it.
at Marty coming down, hits the tramp, slows down. He's ready to party. He's ready to play. Just needs confirmation here. I like Seagate. Stop loss has to be underneath 100. What do you think, Frank?
I'll tell you what, I love the risk to reward that this type of pattern brings us. So on top of everything that you said, which I can't really add anything to that, I think that's spot on. I will add this. If this pullback, if we build the support, if we get that confirmation, I don't know the future, but I do know that these guys were at 108 just a few days ago, right? I do know whatever happened. I'm guessing, I don't know whatever happened on that big wick day, but something did, right? So they have tremendous upside from a risk to reward perspective. I'm very open to these type of trades because I don't have to win a lot to get ahead on them, right? And so the technicals are there, the support is building. I'll be a little picky and I'll say what I want to see. So far, so good, but I want to see today's candle have both the higher low and the higher high than yesterday's. It looks like that's where we're going to end, but there's still some time left in the day. Pushing through that high on Monday would be that confirmation.
Yeah, I think you got to get above 103 for confirmation.
I think you have to. I think you're dead on. We want our stop below that doji, below that nice $100 mark, and see if this momentum can continue. The risk to reward is absolutely there, in my opinion, and then some. I really think you can map something out nice here.
Awesome, Frankie. Last round here, Frankie. What are you gonna go? You brought two discretionaries the first time. You going to the well again, or where are you gonna go?
There's two that I want to go through, and now you're making me choose.
You got to pick. Listen, we'll get the other one in somehow.
All right, there you go. All right, I'll pick Lin, Lin. Over in the basic materials, specialty chemical space, very orderly pullback, much like the sector as a whole, right? Pulled back throughout this week into potential support catalyst, this time in the form of the 20-day simple moving average, starting to see a little bit of upward movement develop, starting to see that intraday turn around a little bit. Probably need just a little more upward movement, right, to get rid of that downward trend line on the intraday. But I like the location. While I don't expect the risk to reward will be quite as good as yours on Seagate, I do think with a retracement like this, it'll be very similar analysis in the fact that if I get that confirmation, my stop loss is going below yesterday's low. I easily am targeting this recent high, right? That's an easy place for a first target. by probably 350. So another really good risk to reward trade in a space that has been moving, can certainly move. So I present to you Lynn for my official last choice.
Yeah, I like the retracement analysis here in Lynn. Sherwin-Williams has a little bit of a flag, but you're seeing increasing bullish momentum over time in the specialty chemicals area of the market, and you got a very consistent retracement here. Very similar to what I talked about with STX. You got a very clean retracement. I think you're talking about 333 as confirmation when you're looking at that handle from an intraday perspective. It really kind of stands out, double bottom there. You see it again, test the following day. That's where it showed a little bit of weakness here today, as well as right there at 333. So that would be looking at confirmation at this point above 333. Stop loss to me has to be underneath 330, but most likely the 20-day moving average as well. Keep an eye on that. I like the structure of the trade. Frankie, we got Lynn, basic material. We got a few in discretionary. Got one in tech. Oh, let's go. Man, I got a lot.
I know it's always tough. You're to blame. You're the one who said last one.
Listen, at some point you got to be done, right?
Do you really?
I like snow in tech. I like Datadog in tech as well.
Yeah.
Just kind of rapid fire. You look at that snow, little flag developing. You look at D-Dog. Very choppy, a little bit volatile, but a nice little breakout against 200 makes some sense to me. I like HPQ as well in the tech space. I told you we get them through it one way or the other, Frankie.
Yeah, we find our ways.
Let's go with SWK.
Oh, Stanley.
And I'm gonna try to get you on something, Frankie.
All right, let's see if you can get me.
I knew my first two. I come on. That was easy.
Yeah, those were easy. Yeah, you knew you were going to get me on board.
This one, a little bit more challenging, especially given the backdrop, Frankie, of what you said on silver. You like the analysis on silver, right? But ultimately, that analysis led you to be impatient and waiting on that breakout, right?
Correct.
Be impatient and waiting on that breakout. And you know what, Frankie? Coming back, Jesse Livermore's on my mind here today. I read quite a bit of Jesse Livermore yesterday. He said after spending years in Wall Street, after making and losing millions of dollars, I want to tell you this. It was never my thinking that made the big money for me. It was always my sitting. Got that? Set tight.
Yep. That's good advice.
And that's good advice if you're in a trade and you're letting the trade work itself out. But that's also good advice if you're being patient and you're waiting for a setup to occur as well.
Yep.
And that's what you're doing on silver. You're saying, I'm waiting on that breakout. Well, SWK here, okay, let's go back. SWK here, you're seeing a little bit of the very similar analysis on Stanley Black & Decker that we were looking at on silver, with a little bit of reversal analysis, head and shoulders reversal coming into the 200-day. But what I'm going to try to get you on, Frankie, because I know you'd like the breakout here, what I'm going to try to get you on is a little bit of front running with this pullback, looking at a doji in front of the 200-day moving average. I like the consistency of the price action. I like the head and shoulders, but I really like the horizontal nature of that 190 level. It just stands out to me. Old support, new resistance, new resistance. You break out a 190 with force, you get into the 200 zone, you retrace back down into that 190. You see that hammer candle coming in right at 190. I like it with confirmation. Let's get that confirmation. I like it with confirmation above 193 targeting. Ultimately, you're targeting back up into the $200 level range. I like a little bit of front running in front of the 200-day moving average. Frankie, I know it's one of those coin flip scenarios, right? It's one of those coin flip
you
scenarios.
Don't know. Yeah, you don't know.
I like
it could go
the front
either.
running here.
It could go either.
And a lot of it's based on 190. I really like the support level of 190.
Yeah, and I respect that, and I wouldn't fault somebody for going that route, especially if it was a scaling in technique they were using.
And
where
it always would be with
we're front run, we're in 50%. We'll add on the 200 break. For me, the 200 break would be the play. I will certainly be pulling for that because I think the 200 break would be a really good trading opportunity. And well, I'm always pulling for my fellow traders. The way I kind of see it is if we clear out of that stuff, right? And the big caveat here is where that 200 is. For better or worse, and sometimes I look like an idiot, sometimes I look like a genius. I am going to put a lot of emphasis on that moving average, and I do want to be consistent in my approach, right? So that's really the only
If I
thing that
removed the green line,
if the
would you have a
green
different
line wasn't
perspective?
there, I would, quite
You would,
honestly,
wouldn't
I
you?
would. Yeah, I absolutely
And
would.
and one of
If
the
that,
things I really like about it, Frankie, is the consistency of it technically. You
yeah,
see this as a very consistent downtrend. You see that as a consistent reversal. You see that as a consistent breakout. You see that as a consistent retracement. And 190 stands out to me as a consistent support level. And so
yeah,
I'm never going to fault somebody for waiting for more confirmation.
so, exactly.
That's
And
not
that's
who I am, right? And this is still, even though the candle's green, it's a gap down, guys. This is the day where you're still going down on the day. You got to see some upward movements in price here, but I like the zone at 190. Frankie, your last one. What do you got for me?
all right. Well, my last one, I
Well,
just wanted
well,
to
your last
bring
one,
up
the one you were gonna just
my other debate was
rapid fire.
ACVA, ACV
AC.
auctions. I really like this right shoulder break that we got a couple of days ago, showing nice reversal characteristics after. I mean, this is kind of the turning point on the IPO on the chart,
Yeah.
right? Just pure reversal play where this is basically step by step. Got a clean window up to about 25 where we do have some stuff. See how we navigate that. And let's just take it step by step. So I really did like, it might be a little tough to get in today. I would argue that the trigger happened earlier this morning, and at this price, that is going to matter a little bit because I think your stop has to be below both the breakout channel and the 9 EMA at a bare minimum, which might present risk to reward issues at this point. But I do think this is very much worth being on the radar as long as we hold that breakout channel.
Frankie, whenever somebody comes and brings me a recent IPO that's given a couple quarters of data, kind of what you should do with IPOs, quite frankly, give the market some time to really understand the stock, to understand the story of the stock, the fundamentals, the technicals, how algorithms behave around the stock, to see that consistency. And whenever I see something like that, and you'll have to remind me of the symbol because I'm not familiar with the stock, but it reminds me of Facebook. Many years ago,
ACVA, by the way,
right?
ACVA.
Many years ago, whereas Facebook was one of the most highly anticipated IPOs that came to the market. And I'd never in my career ever gotten more questions on an IPO as of at that point than
I
Facebook's
imagine.
IPO. And Frankie, like every time I got to the point where I was like, you guys are insane. You're just insane. There's no way this is a buy on the IPO, like zero chance. But about 6 months later, I shockingly stopped getting questions on it as Facebook went from 40 all the way down to 20. Disastrous performance following an IPO. And I remember saying something back then. I said, guys, you got to wait till the pain goes. Nope. I said, you got to wait till the hate goes too far. And the hate went too far, right? And then all of a sudden you get reversal analysis with double bottoms, moving averages start turning over, you start getting moving averages, and then all of a sudden you start developing a fairly consistent bullish uptrend. And we all know the story years later. Mark Zuckerberg's an alien destroying humanity. Okay. But it started with an IPO that had a reversal 6 months later. Once again, the symbol, Frankie?
ACVA.
ACVA.
Auction.
So ACVA here comes out IPO, downtrend, comes in, stabilizes. You start to get some moving averages. You start to get the fundamental backdrop. You start to get the value technical backdrops. And what do you have now? You have a very consistent right shoulder, head, and then you have a consistent breakout channel. This is secondary confirmation above 22. You got the first confirmation above 21. Looks like it's going to walk up the stairs to 25.
Yeah, that's kind of where my head was at as well. So
I can see why you wanted to bring it.
I know I was tough because I wanted Lynn, but I wanted this, so I'm glad we were able to find a way to sneak him in.
Always, my friend, always
guys, fun.
You've been watching the halftime report presented by Tackle Trading. If you're new to Tackle Trading, make sure to hit that subscribe button. Also, get over there to tackletrading.com. Sign up for a 15-day free trial of the Tackle Trading Pro community. And you just got to ask our pros. They love what we do for our community. And quite frankly, we're going to provide some of that for our community later on today as we dial in our scouting reports, the stock, the options, and the commodity reports, as well as the tackle trading newsletter with the newly rapid fire section, which is one of the more popular segments of our tackle trading newsletter. And if you're very new to trading and investing in general, on Monday night on this very same channel, Tackle Trading's YouTube channel, I am going to be conducting a webinar, Tackle Trading 101 on swing trading, where I'm going to talk about trends, patterns, support, resistance. We're going to do a little bit of case studies, prepping some trades, and we're going to talk a little bit more about Jesse Livermore quotes as I navigate the world of swing trading as told through the words of the greatest trader of all time, Jesse Livermore. So
Nice.
Definitely hang out with me.
You're going to want to catch that one. That one's going to be good.
Night. We're going to have some fun, Frankie.
Going to have some fun. And
Tim says to me, he's like, Matt, how long are you going to go today? Or on Monday? And I'm like, I don't know. He's like, well, is this like 45 minutes or like, what are you going to do? He's like, how many slides you got? I'm like, currently? And he's just like, oh, you're insane. I said, all I know is this. We're having fun on Monday night. We're going to learn a lot about swing trading, and I'm sure I'll have some hits and some misses from my analogies, but we're going to have some fun. For those of you who are not new to the tackle trading mascot called Marty the Elephant, Marty's making a comeback on Monday as well.
Get to meet old Marty. It's a good time. People generally like Marty. Marty's a pretty popular fella.
Who doesn't like Marty?
Tim.
Like, that's fighting words. I feel like Doc Holliday and Tombstone. Say when.
Everybody likes Marty except for Tim, and maybe Tim just says he doesn't like Marty to get a rise out of you. But maybe he doesn't like Marty.
Everybody likes Marty. All right, guys, we are out for today. Hit us up in Discord, but we will release our reports tomorrow morning. Tackle Trading, you guys are the best. Thanks for